Hello everyone, good afternoon and welcome to Trading the US Open live here at the Live Trade Room. Now today is Wednesday the 17th of October just briefly before we begin, what you can expect is looking for high probability directional moves in these markets, looking to capitalize on price action and what's really going on in these markets and looking to trade the markets with a bit of momentum. And we're professional traders trading with live capital, so every decision you see us make during the session is a very real decision for us. So what we do is we look to identify high probability trading opportunities, we look to execute with a high degree of consistency in our approach, and then we'll manage those trades with discipline. And for us that is cutting a loser short if the markets are not performing as we would like. But looking to let those winners run when we get those opportunities in order to book in consistent returns. So that's what you can expect. So just before we begin, please do familiarize yourself with the risk warning currently up on screen. And before we begin, it's important for traders to have an understanding of the news flow for the trading session. So do please take note. I suppose the major news for this session, well, there's two bits. The first one is inflation data out at 9:30 impacting the pound. It was very likely to have a negative impact on the British pound. We did look to take a small sell trade in this morning, so we'll show you that trade now very shortly. And it was a yearly CPI number, and a decent amount below the forecast. It was forecast 2.6. We've actually seen a 2.4, and we also had a mildly positive PPI number and a negative RPI. But really the big headline rate is very much the CPI. In addition to that, for the trading day, we do have the economic statement summit, should I say, in the EU over the next 2 days. So what we're likely to see and experience is politicians speaking to the media and potentially the markets reacting accordingly. As we look through the rest of the day, we've got some housing data out impacting the US dollar, but the major news really, well, there's two bits. Firstly, the crude oil inventories at 2:30 for the oil markets, but the FOMC meeting minutes this evening at 7 p.m. So that's the FOMC meeting minutes there for you to be aware of. So I suppose the major volatility that we could experience is off the back of the EU economic summit. So without further ado, let's see what's been going on in these markets. Again, in the latter part of the European open session, we've had quite a strong constructive move lower. It was a trade that we were looking at very closely this morning. The same situation on the pound dollar. We had quite a little bit of volatility around these areas in here where we got the initial explosive move, we got the pullback, we got into it, we extended lower, we were able to mitigate our risk, and we experienced a little slight pullback before we actually received the move to the downside, literally over the last hour or so. So that's when we've seen the majority of the move. So now we're trading this session again. We need to assess or reassess the opportunity. Dollar yen. We still like the dollar yen higher, but as you can see, there's not much movement just yet with regards to the dollar yen. What we'll definitely do is have a further look at both the euro dollar and the pound dollar. Will come back to both of these markets. What we do need to see now is a bit of a pullback for us to get into these, but we do expect these markets lower. And we've had the Swiss franc react accordingly. We've had a kind of a slow grind lower, and now we've got an explosive move pushing higher as we look at these charts. So there's a bit of strength coming in at the moment, just not so much against the US. Against the yen pairs, looking like we could get some good opportunities tomorrow, potentially in the Aussie dollar to the downside, and potentially the New Zealand dollar to the downside as well. You can see it's very close to touching that descending level, so we might get some continuation there. So the euro is strengthening somewhat against the British pound over the course of today, and today is day one of the EU economic summit. We're seeing a bit of strength kick in, but these moves here are very much pound and euro weakness as opposed to sort of any real Japanese strength. But we've had a complete sort of rollover from yesterday's price action. The gold market. Bit of indecision really at these higher levels. We've had the explosive move up, we've had a bit of a rollover to the downside, and now we're just sitting there with a bit of indecision. The clarity is not great really. Ultimately we'd expect it higher, but what we would also like to see from a technical perspective is a pullback to the 1214 before we get that next leg higher. US oil markets. We can see here are just kind of rolling back a little bit. We had been looking for these markets to potentially reverse quite a lot, but we've not seen that price action. In fact, with the We were looking for a break above the 82.08 and the price was never ever able to achieve that kind of price. So we've had some sellers coming in and a series of tops at this 82 level, and now we're getting this market rolling over to the downside. So I suppose short-term volatility to the downside. The problem is this afternoon we have crude oil inventories, and that has the potential to change this this kind of move to the downside. So it'd be interesting to see what figure we get and see how the market reacts accordingly. The S&P, we've had an initial move higher followed by kind of a rollover to the downside, and the reality is now it's kind of in keeping with the more recent trend, which has been very bearish, and we're seeing that across the board. Even the FTSE 100, we've kind of closed the gap now, and we might start seeing extend lower, and the Euro Stock 50 is rolling over to the downside. So we can definitely look now with a bit more of a bearish view. Tomorrow would be the higher probability trade, but we can definitely see this market pulling back further for the session. So we'll definitely have a look at this level here and see if we get some continuation further lower. We've had the move, in fact it's quite choppy price action, so we've had the explosive move higher, we've had the roll over, we've broken below the 28.10, we've created a low, and then we've pulled back to that 28.10 again, and now we're extending even further to the downside. So this is a trade actually that's even quite interesting at these prices. So I think while I'm on this trade now, we can take a, let's see if we got to close below that level. So we're just closing at that level. It is above the 28.02. We prefer to sell below that level. But let's see if we get a close at this level now. We can maybe look to get in with a small trade. So let's see if we get the close and continuation. So there's our close in the S&P 500, and let's see if we get some continuation to the downside. So we'll sell one index, so we predetermine roughly what sort of capital we're committing to the trade. So it's well within our means to take this trade. It is going to be one of our selected markets for the trading session, so we'll just have a look at this level now and just see, do we get a break below the 28.02? If so, we can look to get into it. So so we're just hanging at these levels. So let's see if we get a little bit of a move lower. If so, we'll get into this, and we have all the global equities, potentially looking to squeeze lower. So that's the we'll get into the S&P to the downside. The oil market, it's just rolling over, but we'd like to have a look at this possibly at the for the equities, for the crude oil inventories, should I say. So let's see if we get some continuation lower, we'll get into this trade. Let me put the remaining charts up. So we'll keep an eye on the oil market. So the euro is mildly stronger against the pound, as you can see here, top left. And we're getting the yen really strengthen. So the two other markets we'd like to have a look at would be the pound dollar and the euro dollar. And we do have the FOMC meeting minutes coming up at 7 o'clock. So we're looking to go with a trade, obviously over the short term. Right, so now we're looking like we could be getting into... So right, let's get in then to the... So see, what we're trading is a retracement of the 2806, so we can put it at the 2807.5, just above this level in here. And what we're looking to do is quite a simple trade idea, really, is for a retracement, or continued retracement of this really strong pullback candlestick. If we're above the 2816 level, we'd be expecting this market to squeeze higher, and if we get this kind of price action which is very much rolling over to the downside, then we can now look for an opportunity to go with this momentum, and we're seeing it across the other equity markets as well, so it's very much in keeping with expectations. So even the FTSE is looking weaker, and so too is the Euro stocks. So the markets that have moved quite considerably over the last hour or two have been the pound dollar and the euro dollar. So we were looking at these markets this morning, and we're getting the moves at slightly inconvenient times for us, really, in terms of normally the first couple of hours of a recession are normally the most volatile periods, and what we're seeing is that we're seeing a lot of consolidation and sideways moving price action for the first couple of hours, and then we seem to be seeing the moves. So last night was another case in point. If we just look at the S&P, and we will zoom in, we were looking to buy this market yesterday at above the 27.75, and today now, in the latter part of the afternoon and early evening, that's when we saw the explosive move. Yes, started to see higher highs and higher lows in the build up to that, but we finished the trading session around these kind of levels around here, around the 27.60 level, and as the evenings unfolded, we've seen the really strong move to the upside. And now we're just moving sideways, and now we're getting to see that rollover price action to the downside. So, and please do note that the stop loss is actually firmly above this particular low here. So if we do get a pullback, then we're likely to get a little bit of protection from this level. So we'll stick that level in there, and hopefully we'll get some follow through to the downside. So we can monitor the dollar quite carefully, see if we get any explosive move. The oil market as well. We may get another flush to the downside. If so, it might be worth considering getting into post, or should I say pre crude oil inventories data. So we've only got like a 5-point stop loss in this market. Again, it's just keeping a very So it's keeping a tight lid on our monetary exposure in this market. That if we see the move lower, then we would look to mitigate risk quite quickly on this trade. We are mindful that yesterday's price action is very much very much to the upside, so it's a counter trend move as things currently stand. So the 71.41 in the US oil market is the level we're looking to see if we get a break. Excuse me. So I'm watching the US oil market on the top right hand corner of the screen. And waiting to see if we get an explosive move lower. We're already in a sell trade now for the S&P 500, just going in line with the momentum across the equities as things stand. Getting a bit of a pullback off the lows now. We've got a bit of a late European Open session move prior to the US Open, and now we're getting a bit of buying coming in. So we want to be careful with these two markets. With the oil market, we can certainly have a look at this market on a 1 minute time frame. So that was the last move. Then now we get the sideways moving price action, and now we're looking at the next move lower. So let's see if we get a close below the 71.41. The one thing I'd like to look at is just compare and contrast this one with the so we're still seeing a similar bit of price action. We've already broken below this level, so that level there, we're currently at that level. In the US oil, we're at that level as well, but we've already broken below that ever so marginally. So let's look to get into the US oil then. We can have a look at these markets on the same screen. Hi Renko. Why not wait till New York opens to trade the ES? Just because it's obviously it's a market that we can trade. Look, we're just getting this move now in the US oil. So that's the importance of this level in here, the 71.46. We've had really 25 plus pip explosive move lower. Let's see if we get a bit of a pullback to this 71.41 level, and we'll look to get into this. The run up to this level was really slow, just very slow grinding price action. Really strong explosive move lower, which we'd expect this market to continue lower. So maybe it's a bit of news and information coming out. So maybe we can, maybe we get a little bit more of a squeeze. So this is quite a strong retracement off that level. And now we're just getting that bit of rollover. So we've kind of closed half of that. So if we start rolling over to the downside from here, it's a trade worth taking. It's just a preemptive move, really, Renko. So we've conducted our analysis. You see, I'm quite eager to just keep monitoring this chart really right now. But what I'll do is I'll just drag this over to the left-hand side of the screen. So we're getting a constructive pullback now. So we want to see this market come back to the 71.41. If this closes and we start rolling lower, I'd be happy to get into it around this sort of price. At least we're not getting in at this level. So might look to take a trade any second. So really strong explosive move. So there's clearly momentum to the downside, and this price is looking like it's wanting to continue lower. And we've certainly got a couple of hours before the crude oil inventories that could obviously shake and shape this market. So so as we're looking at this market pullback, hopefully we can see that the S&P, and it's just a preemptive move really, Renko. So yesterday we saw a really strong reversal in yesterday's candlestick. And if you look across all the equities now, all the European and US equities, you will see that they're all looking like we're going to get some selling coming in. And the reason why we got into it a little bit earlier is because what we'd like to see happen is your US traders to see this price action and then perhaps consider that. Right, let's get into this market then at this price. So that's the US oil, and let's see if we get some continuation lower. So that's the 71.50 level. So 71.55, somewhere just at that kind of level, just a little bit above this little handle in here. Okay, so let's see if we get that little rollover price action. The first port of call really for us is to break this level down here. Then we can bring our stop loss right down and take away probably most of the risk on this trade. So it is a technical trade, and again on a daily time frame, it is looking quite bearish. Now we'd only expect these markets to come down to these kind of lower levels. There's a lot of support certainly around the the 7100 levels. So we just want to be careful and mindful about how long we're in this trade for. Sorry, Renko, I was very much distracted with this move here in the oil market. It is a market we would like to be involved in. So going back to why we're getting into it prior to the open, and it's just kind of, it's got a preemptive nature to it. We're looking at these charts, and there's clearly a bit of a retracement kicking in off the back of yesterday's very, very bullish price action, and that's what we're looking to trade. Yesterday's earnings season, performance is expected to be pretty decent. So unfortunately, again, if these markets started to turn around and started to really aggressively push higher, there's kind of scope for that in our thinking as well, if that makes sense. So obviously trading these markets at the moment is a bit precarious, no matter which direction you're trading these markets in. But above the yesterday's high, 28.16, can give us a good opportunity higher, and somewhere below that 2800 level can potentially give us a good opportunity lower, especially if we get some continuation and flow across the equity space, which is what we're currently seeing. Yeah, Renko, so you said, can you tell me a bit about your broker? Yeah, we trade with, or our traders trade with Hantech Global. They are an entity that can provide our traders with the leverage. They're regulated outside of the EU, and it is a pretty good solution. They're a part of the Hantech group, which are FCA. They're FCA accredited. But it is an option that brokerages in the UK and Europe offer, certain clients, for them to access obviously the leverage, because what the authorities have now come to the conclusion is they're okay with people trading, but only if they trade with more capital. And there is very, very strong requirements on leverage and also margin as well. So what they've effectively done is prevented people from learning how to trade with small amounts of capital. So what people are expected to do now, in real terms, is anyone new entering this market will have to have a really large account size, and trade these markets with obviously more capital, more risk in terms of monetary risk. And if you haven't sort of got a basic understanding of the psychology of risk, and if you haven't spent the time learning how to trade these markets properly, it's incredibly high risk. So what they want to do is for the financial markets to be just for those that are in the know, and almost they do it in the name of protecting clients, but in actual fact a lot of that is to do with the bad practices of many brokerages in this industry. Not so much with penalizing new entrants with regarding forcing them to trade with much higher capital deposits. So we do have a solution for our traders. There is an option for them to go through the FCA channel if they would prefer that. So that is an option available. But most of our traders do trade through Hantech Global. They can access the leverage they want. They're still a very reputable brokerage, and we do partner with them. So we both have. I suppose, let's say that the conflict of interests are aligned, in that we want to provide the trading education, and they'll provide the brokerage services. So it's hopefully kind of win-win, and it's a relationship that's really sort of flourishing, and that's amongst a lot of the practices from many brokerages we could not stand behind or tolerate in any way, shape or form. It's a difficult industry, so we've now found a really good solution for our traders, and we're very, very happy with it. So we do stand behind. We're independent to our brokerage. That's the other thing to mention. We're not at all beholden to them in any way, shape or form, and that's really important. And what what that means as far as traders are concerned is that we can focus on teaching people the skills necessary that they can survive long enough to know and understand how these markets move. And that's what traders don't really give themselves the time. What's been the norm up till now is probably the length of someone's involvement in these markets up till now has been sort of 3 to 4 months. And I don't know how much experience you have yourself, Renko, but it's clearly not enough by any stretch to have a comprehensive understanding of these markets. Do we have a link? Yes, we do. I'd be happy to post that into you now so you can have a look at it. It's a precarious thing to be able to find the kind of a well-run brokerage that kind of treats its traders fairly, and you know, you don't want practices like the first thing that most people look at the first thing that traders look at is there's the link there for you, is the spread. Now the spread, yes, it is a cost of business, but so is slippage, and so is overnight swap rates, and also gaps and things like that. So there is a lot of spread widening, should I say. So there's a lot of other reasons that are far more costly to traders than just the spread. So we do want to make that clear with traders, because I suppose the trader thinks surely the lower the spread, the better the company is, and unfortunately that's not the case. In fact, it's often the absolute opposite, because they're not making any money from trading activity, so they want to make money via other not so by not so popular other means, if that makes sense. And you know, if you can find a brokerage that operates in the right way, gives you and quotes price in the correct manner, without significant tactics. Of course, if there's a major news event, you're going to get volatile price action. That's not really what we're talking about. We're talking about requoting, we're talking about spread widening, we're talking about lots of little tricks of the trade that these brokerages are finely tuned at doing. And this is some of the things that the regulators are trying to clamp down on. And for us, from that side of things, you know, that can't come quick enough. So really, it's just finding a solution, Renko, that provides all the markets we need, that operates in a transparent and trustful manner. And the other thing that we offer our own traders is the fact that because we have a relationship with the brokerage, if there's any discrepancy of any kind, if there was an issue with a particular trade or anything of that matter, then we can arbitrate for you. So we can obviously, our traders can come to us, explain the situation, we can take it. We've got a very strong relationship with many traders with the brokerage, so they obviously do, that it'd be in their interest to kind of take care of the situation relatively quickly and respond very, very quickly. Not that we've had any situation yet with Handtech Market of any kind, and that should be commended. So they are a very good brokerage, and we are very happy to work with them. So that's a little bit about the brokerage. So yeah, if you do want to click on that link, do look into them, and you know, do let us know, Renko, if you'd like to set up a trading account. And have you become a member? Are you planning on becoming a member, Renko, if you're still online with us? We do have some very interesting announcements that we'll be making available for our traders now in the next, well, we're in the final stages really, so in the next probably week. And we're still currently offering that 14-day free trial as well, so it might coincide quite nicely with some of the new developments. And it's really pro scalping trading sessions. So the methodology that we were certainly I'm more familiar with is kind of an intraday swing trading platform, but many of our traders, they do want to scalp the markets, which is a very different way of trading these markets, and we've got a professional coming on board to actually deliver those sessions, so I'm sure you'll find them very, very interesting, and we'll be making that announcement now very, very shortly. All it means is I guess the reality is I suppose a scalping session will be concluded within the actual trading time frame, so there'll be potentially many more opportunities to get in. Yeah, so you're more of a swing trader. Yeah, okay, so you know, identifying these types of opportunities you know, can probably work for you as well. I don't know if you got into the euro dollar or the pound dollar this morning. But yeah, for those traders that want to trade a professional scalping approach, then we'll be providing those for our traders as well, and we've got many more products and services available. So do have a look at our website actually if you want to see what else we offer. I'll just put in our website. Oops, apologies, I keep pushing the wrong button. Yeah, so that is our web address as well, and you can see the different membership options on our web page, on our home page there, and you can see what you get for the $9.99 membership. Effectively, it's some education, and also up to 76 live trade rooms per month is the current rate. So let's see where we are at with these markets. So we're getting this slow in here. How are you getting on yourself, Renko? Are you? We're getting a lot of the moves that we would ordinarily like to trade, and they're kicking in sort of in the latter part of the trading session, which is a little bit frustrating right now. Normally the first couple of hours are the most volatile. Traditionally they're especially from a swing perspective. I don't know what you think, but how are you getting on with trading, Renko? Do let me know. Be interesting. So this is the initial kind of breakout level, which was the 71.41, and we saw a really strong explosive move. And you know, this kind of price action is not great, because you get a really strong explosive 30-point move, and then the market just looks to just literally sink sideways, which is effectively kind of what's happened. So you get 1 minute of explosive price action followed by, and it's a shame because all we needed to see was like a little close below the 71.41, and we were looking to get into it to the downside. So what we have done, just to fill you in, Renko, is that it's a very, very small trade size trade, so it's preemptive, and because of that reason we've reduced our risk. So we're only trading one index. And yeah, okay, so you trade with the Renko. Yeah, okay, hence the name, I guess. So very good. Yeah, no problem. I suppose the thing is about trading strategies is that you still need to decide what to trade, how to get in, how to get out, how to manage your risk, how to be consistent and disciplined with that approach. And of course, patience is a huge part of trading as well. So all of the fundamentals don't really change. Doesn't really matter what kind of trading approach you use and you adopt. And that's why we focus on those things. And then whatever strategy traders use is very much obviously down to themselves at that point. Just see if there's any. Don't think there is, but slightly mixed bag, I guess. Slightly less than anticipated on the building permits, and housing starts very, very similar to the expected. So no real reason to panic as far as that's concerned. We had a positive manufacturing sales number. It was less negative than expected, so that's mildly positive, although it's negative by its very nature. And crude oil inventories is the next number. So we've had a couple of large fairly large actual prints in the last couple of weeks, forecasting between, let's say, minus 2 million barrels and plus 2 million barrels, roughly, give or take. And we've had a plus 8 million barrel print 2 weeks ago, and last week we had a 6 million. So so with a lot of those, it can impact demand. The higher the number, often the less demand there will be, and potentially it impacts the price of crude oil adversely, meaning we're likely, if we get a high number, we're likely to get a little bit of selling start creeping in to the US oil market. So maybe this is kind of a preemptive move on the potential for this market to continue lower. Okay, we're beginning to get that little bit of a move now in the US oil market, so hopefully that continues. Let's have a quick flick through these markets now at this stage. That's the euro pound. So a bit of a pullback off these lows. Right, so not much movement in the dollar yen. In fact, it's the falling stock markets that are holding up or supporting this particular market from pushing higher. Dollar Swiss, bit of a pullback off the highs, bit of strength in there against the CAD, weakness against the Aussie, and as you can see, a strong turnaround, which can give us opportunities tomorrow actually in perhaps the Aussie dollar and the New Zealand dollar. The euro pound mildly stronger than the pound, as you can see. The pound yen just rolling over to the downside. Same for the euro yen, but we're running into levels of support down at these lows. Gold market kind of rejecting these lows a little bit now, and looking actually quite positive again. So mixed, erratic kind of price action on those. The oil market, we do still expect this market to tick lower. What we might get before that is a little bit more volatility back to the 71.41, but we'll have to wait and see on that. So what we're looking for is some continuation further lower. Same situation, but we're kind of already squeezing to these lows down here. We're much closer to those. So that's likely to put a little bit more pressure on our oil market to the downside. So we've had our pullback now, and we want to see these levels be broke, and we want to see this price break down lower than the 71.18 level. With the S&P clearly getting a strong pullback on a 5-minute time frame. So maybe this is the next leg lower. So a very, very small risk. As I was discussing with Renko just a minute ago, strong. We do have the markets opening now in 30 minutes. So we'll see how that move impacts these markets. But we're already in the S&P, expecting this market to move lower. Markets have kind of pulled back just a little bit, haven't they, off their lows, off the daily lows. So just waiting for the next leg to push to the downside. So we do need to move over to the live trade room. So we're going to do so now, but please do just have a quick read of the description just below this video. And if you would like to join us, you've got an opportunity to do so. We're still offering a 14-day free trial for another week or so anyway. if you can join us, then that's great, absolutely fantastic. So do feel free to connect with us, subscribe, give us thumbs up if you possibly can. That would be most appreciative. And you can also connect with us through our Facebook, Instagram, Twitter, and LinkedIn. All the details are there up on screen. So basically, thank you very much for joining us. Do take care. Thanks, Renko. Do let us know. Do drop us an email through our website or anything if there's any questions or if there's anything you need help with. We'll hopefully see you through the live trade room. So from everyone here, take care, and we shall speak to you very soon. Bye for now.